Can we proceed? You can start. Okay, so at least you've done accounting for almost how many weeks? How many weeks? At least more than 5 weeks. Okay, so we'll start. What is accounting? Yes. Oh no, so no, it should be interactive. At least you've done it for the past more than 5 weeks, or I will not take Abigail's answer. Abigail is looking at her notes. I will not take her answer. Okay. So if you say what is accounting, what will be your answer to this question? I think it's a past question. You can kindly yes. So yes, go to page 259. Yeah. So let's go to page 259 and read it, so that will solve it. Using it. Are you there? Okay, you've seen the question. 4D. Okay, so the name again. So please read it. So it's a past question. Okay. So what is accounting? I have just developed an acronym for definition of accounting. Okay, so I will go by this. The C stands for classifying. The A stands for ascertaining. The R, recording. The I is identification. Then the S is summarization. Then for what? For consumption. For interpretation. And what? For analysis. So for accounting, this is the way I define it. Accounting is the process of identifying. So you can write. Accounting is the process of identifying, ascertaining, classifying, recording, and summarizing data into statements for analysis, interpretation, and consumption. So accounting is the process of identifying, ascertaining, classifying, recording, and summarizing data into statement of analysis, interpretation, and consumption of what? Of the stakeholders of an enterprise. And this one will earn you 2 marks. Okay. So accounting is the process of what? Identifying, ascertaining, classifying, recording, and summarizing data into statements. For what? For analysis, interpretation, and consumption of the stakeholders of an enterprise. Okay, so if even you forget, and you can at least write carries CIA, at least we know there is a vehicle called Yaris. So even if you forget, Yaris, you can remove the Y there and make it carries. Okay, so carry CIA can help you at least define the accounting. Are we good to go? Okay. Yeah. Okay, then from your manual, at least under the introduction, from definition of accounting, the next one is bookkeeping. And the simple definition is that bookkeeping is recording financial data into the cash book. At least we'll do the theory before we do the calculation. But usually, students are eager for the calculation. We'll get there. So let's take it. So what I've observed is that sometimes out of the 3 questions, they can bring 1 written question. So we do at least the written side, then we'll do the calculation. So the next is bookkeeping. What is bookkeeping? This is captured in your manual, page 3. Bookkeeping is what? Recording financial data in the cash book and ledgers and ledgers. So that's the definition for bookkeeping that is provided in your manual. Okay, so now at least we've looked at what is accounting, what is bookkeeping. Then the next one is uses of financial statements. List any 5. So this is a past question. List any 5 uses of financial statement and explain why they are interested in the statement. You can still get it at page 259. Yeah, okay. Yeah. Yeah. Okay, they are different. So for the daily record, you know, when you buy something, they will give you receipts. Okay, sometimes they will give you an invoice. So the initial recording, that is what the bookkeeping. So the accounting is what we have now will analyze the information. Then the users will now can tell that, okay, this business is doing well or not. They are not so doing well. I think that can be a difference. Okay. Okay. So the next one is we're looking at definition of accounting, bookkeeping. Now let's know the uses of what? Accounting information. And this one is all in your manual. Uses of accounting information. So okay, we want to know uses of accounting information. So the past question, okay, so please kindly read it. I think there's 2 questions, section 259, page 259. That is 4C. It's a year is 2020 past question. 4C.
List 85 users of financial statements and explain why they are interested in the statements.
Read it loudly so that you
List any 5 users of financial statements and explain why they are interested in the statements.
Okay, so then go to 2752. Yeah, page 275. So please, when you are coming, let's come with your. This is my questions and answers that I used, but I have just numbered them. Okay. I think that one is 7B. 7C. Okay.
State and briefly explain 5 stakeholders who have interest in accounting information.
Okay. So these are all in your manual, and they are all what? Past questions. So who can help us? Who can help us? Uses of accounting information. Okay. You can say 3. Okay, that's good.
So the first one will be government.
Government.
The government is interested in a firm or a company's accounting statement for tax purposes.
Okay,
Then the next one is investors.
good.
Investors will definitely be interested because they want to determine if you're a profitable enterprise before they will invest in you.
Okay,
Then
that's
banks will also want to determine your profitability, your assets, and your liabilities to make sure that when they give you loans, you can pay back. And then in the event you can't pay back, you can sell your assets and trade your money.
that's a bigger number 3.
Yes.
Yeah,
You're not-
3. Yes. That's perfect. That's perfect. Okay. Any other? Okay, so we have 2. So what if you said uses of information, financial information? We have internal users and we have what? External users. So you can start that way. So we have first internal users. So who are the internal users? Who are the internal users? So we have 3. We have shareholders. 1. 2. Managers. And 3. Employees. So for internal users, we have what? Shareholders or the owners of the company. That's the first one. 2. Management. And 3. Employees. So why owners will be useful? We need financial information. Okay, so why owners? For the owners, they want to know at least the performance of the business, so that, well, do I need to expand? Do I need to liquidate it? Okay, because you have invested in the business, so your interest is to measure the performance of the business and to decide whether to continue the business, expand or liquidate it. Okay, so that's the reason for the owners.
Would you not be also interested in the profitability of the business?
Sure. Okay, so that's good. Because if you are investing and there is no returns, then why should I still invest? Okay, so that's the first one. Then what about managers? What will be their interest? Let's make it practical. Sometimes you can pick it here. If you don't read it again, you can recall in the exam room. Okay, so managers, what will be their interest? Hello? Managers, okay, so the key performance indicators, their target, yes, it's also a sound reason why they want to know the performance. They want to know the performance of the organization. So directors and management of a business use accounting or financial for planning and decision making, and to monitor the progress of the business. Don't worry, we'll get to the calculation. Okay, we'll get to the calculation. But they are all equally important. So it's for decision making. Okay, so the third one, employees, for the internal users. The managers. Okay, so for the managers, what I have here is they use accounting information for planning and decision making, and to monitor the progress of the business. But these are all in your manual. So. They are in your manual. Oh, the accounting manual. Not even the soft copy. So it means that you are not reading it. Hey, that's serious. If at least first term is gone, second term, at least you can get the soft copy. Please kindly get the soft copy. You can print them and start using them. I mean, I'm sure when you print it will not be up to. I think this one. When you print, I think it will not cost like 50 Ghana. It's better than receipt. I think receipt is around 750 or 1,005. 1,005. Okay, so let's proceed. So far, at least we have uses of financial information. We have the internal one. So from here, at least from today, we know. If we said uses of accounting information, we have internal. You know the three. So what about external? Oh, the three, we've done it. Owners. Come again. You've not done this one. The employees. Oh, okay. Oh, for employees, I want to know the business is doing well, that they'll be able to pay our salaries. Because when we are negotiating, we'll go and pick the financial statement. Say, last year you declared this profit, so money, you can pay this remuneration. Okay, so they are interested in knowing the performance, and so that it will help them in negotiating for their salary. Okay, so then the external uses. So the external uses, we can list them. At least you gave 3 examples. Yeah. So the first one, lenders. Okay, what will be their interest? The banks. When the bank lend to a business, their interest is for you to what? Pay back their loans. Okay, so for ability for you to repay your loans, that will be their interest. Customers. Please, I hope I'm not moving fast. Okay. So, customers. What will be their interest? So, yeah, Abigail.
So I think for customers, their interest will
On time. Yeah, as customers of MTN, immediately you buy data, you expect that what? You receive the data promptly. So that is your interest. They deliver the service promptly. You buy data.
If I'm finding out financial information, that's what I'm thinking about.
Financial
I'm
information.
thinking about whether you are going to be in operation for a long time, I can rely on you.
But if there's information that the system is challenged, okay, so there is a mast that is down in your area. They need money to do it, to repair it. Okay. So as customers, what we are interested is what? Delivery. Okay, delivery of service. And for that one, the information will be, if I see that, just example, you know, Glo, Tigo, MTN, at least, you know, some are going down. We are all aware. So if I'm a new entrant and I want to now buy a chip, it's likely the ones that are going down, I will know what? I will not buy. Okay. So that's for customers. Suppliers. What about suppliers? Come again. So for customers, we are interested in the timely delivery of your services. And for your manual, it says customers may like to know whether a business is financially sound so that they can continue to rely on their companies for supplies and value for money. This is your manual. Okay. Value for money. So for which of the service or the data is cheaper? That's value for money. Okay. So the next one has to do with supply. Okay, so suppliers to, what is our interest? Hello? Let's make the class interactive. At least we've done accounting. You've done a little bit of accounting, so let's. For suppliers. That is perfect. For you, for suppliers, sometimes they buy from you on credit. So your interest is the ability to pay and timely. Okay, so when we are doing accounting ratios, you see how long it takes for you to collect your debt and how long you pay your suppliers. When you are doing the financial ratios, we'll look at them. Okay, Abigail number 3 mentioned government. Okay, you mentioned government. They are interested in what? Tax. Okay, the next one has to do with investors. So investors. So that at least they need that information to know that at least you are making profit and they can invest in that business or in your business. So your manual says that investors want to know the viability of the business before investing their money in the business. I think the rest you can read it. Okay, it's a lot of them. At least so far, at least averagely the questions are 5, 5, 5. So you can read the rest so that you can proceed. Okay, so at least the introduction, the last part. Why should lawyers study accounting? So why? Why should you study accounting? Any reasons? So the first one is a legal requirement. Okay. So for the first reason is what? It's a legal requirement. Compliance with legal requirements. I brought my LI 2423. I don't know whether you started using it. Oh, you've not seen it. I think LPM. LPM, so. So for compliance with legal requirements, and one is to comply with Rule 27 of the Legal Profession Act. So it will enable the lawyer comply with provisions of Rule 27 of the Legal Profession Act and Section 48 of the, that is Act 32. That's the Legal Profession Act 1960, Act 32. So there is these two requirements here. So one, for us to comply with what? Rule 27. So Rule 27 says that when you give money, 27, LI 24, 23. Is that Rule 27? Rule 27 indicates that when you give money to a lawyer, the lawyer should issue you a receipt. Okay. And in the receipt, you also need to state the reason in the receipt. Okay. And as a lawyer, you need to also maintain at least the client money. You need to separate that one from your money. That is what we call the client account. And it's a whole topic. It's a whole topic that is a favorite, one of the favorite topics for the examiner. We'll also look at it. So these are some of the requirements. So the second, so I'm saying that for you to comply with Rule 27 of LI 2423 and Section 48 of Act 32. The, Rule 6. So for the well, Rule 6. So this is Rule 6. A lawyer shall provide competent representation to a client in the form of legal knowledge, skill, thoroughness, and preparation reasonably necessary for the representation. So you see, as lawyers, don't take things on their face value. Every time, verify it. Okay, the manual can make a mistake. So the fact that the manual has stated it, just go to the rule. That, for me, that is my nature. Even in the class, when I go back, I'll check. If I see something different, I'll either private you or just inform you that, okay, the last time you said this, but this is what I found. So then we just reconcile. As for the law, it's dynamic. The Monday like this, tomorrow, Supreme Court can deliver a judgment that will change the face of the law. Okay, so every time when you see something, just verify it. Even Supreme Court itself, sometimes they make mistakes. Okay, so we are all not perfect. Okay, so that is they stated Rule 6. Okay, but here, if you look at Rule 27, Rule 27 has to do with account of lawyers. And you say that a lawyer shall give a receipt for each payment made to the lawyer and specify in the receipt the purpose for which the payment was made. Okay, so that's the first requirement. So what's the second one? So that to enable you conduct effective cross-examination. That's the second requirement. Okay, so to help you conduct effective cross-examination, a referee will present a report. Maybe a referee will present a report to court. Okay, then you are to cross-examine the referee on that report. So if you don't have knowledge in accounting or financial information, how will you conduct effective cross-examination? So it's to assist us as lawyers to conduct effective cross-examination. Oh, okay, so a referee, well, it can be a court expert. So there is a matter in court. Okay, so between the plaintiff and the defendant. So the plaintiff is saying that, oh, okay, you are owing me 100,000. The defendant will say, no, I've paid the entire amount. So they will appoint an independent person to at least review the document and come to an independent decision to assist the court. That is what I'm referring to as a referee. Okay. So what's the third one? To acquire knowledge to manage the firm. So as firm, some run as a partnership, as a company. So you need accounting knowledge to run the firm. Okay, but at the end of the year, you are expected that at least you prepare financial statement. Though you appoint auditors to look at it or to audit your books, at least you should have a fair understanding. Okay, so that's the third one, acquire knowledge to manage the firm. Are we good? Sure? Okay. So as lawyers, we provide financial advice or we provide professional advice. So we also need knowledge in what? In accounting information. So that's the next point. Okay, the next point, as lawyers, we sit on boards. Okay, some are secretaries. And we need, and as board, they will present financial statements to the board. So you, as a lawyer, you need this understanding so that when they present this information, you can interrogate it very well. So to facilitate the lawyer's understanding. That's the next point. Okay, so for at least by way of introduction, I think these are the things that we should know. What is accounting? What is bookkeeping? Uses of financial information, and why lawyers should study accounting. I think this is the introduction. Okay, so now we can just move on to the next topic. That is accounting equation, where we'll do a little bit of calculation. Okay, so are we good to proceed, or any other questions? Okay.
Can you substantiate further? I mean, if I have a firm, I can equally get a finance lesson. Why would I do?
If you, everyone, at least everyone should have a basic accounting knowledge. So if they present the information to you, how does that information make, it should make a meaning to you? At least you have a little bit of understanding, so that when the person presents the information, you can also interpret it. And you know that, oh, we are doing well or we are not doing well, before even you seek the external advice. Because you, the lawyer, also give advice. Okay, so you should also have understanding the accounting, and it will also help you in providing the advice. Okay. Okay, so are we good on the introduction? Okay, the introduction is, so let's look at accounting equation. So that's the next topic. Okay, so for accounting equation, at least we'll do a little bit of calculation. Okay, so for accounting equation, basically we are saying that at least we are looking at our assets. We are looking at our capital that we started with, and the liabilities. So for accounting equation, basically this is what we are going to look at. And then at our basic level, we're taught change of subjects. Okay, so this is the accounting equation. We are saying that assets, okay, is equal to what? Capital and liabilities. Okay, and I hope you know your assets. So what are assets? So we have what we call the non-current assets. And what are the examples of non-current assets? Hello. Examples of non-current assets. So we have non-current assets and we have what? Current assets. So for non-current assets, we are looking at what? The tangibles. We are looking at the land. We are looking at what? The building. We are looking at what? The vehicles. So these are permanent in nature. Okay. So these are what? They are permanent in nature. And they usually expand more than a year. What about current assets? Please, am I moving fast? So this one, so for them, so like just like a vehicle, when you buy a vehicle, we said it's an asset because you use it for more than a year. Okay. But by default, we are saying that it's what? It's an asset. Depending upon the industry, it can also, a vehicle like this can be a stock. Okay, example, CFU, those, what do you call it? Those who sell vehicles. So for them, it's a current asset. So it depends upon the industry. But by default, if you sell vehicle, building, land, they are what? They are fixed. So this one, either non-current asset or fixed asset. But usually we don't see fixed assets. We say non-current or property, plant, and equipment. Okay. So current assets. What are current assets? So this one, you can easily convert them into cash. So this one, you can easily convert them into cash. So one, you can say stock. Or what? Inventory. Any of them. You can say trade receivables. That is our debtors. Please, let's understand. Let's not just be interested in writing. We should just get it. Okay. So trade receivables. Then the third one, you can have enough. You have your cash, either at hand or at bank, or you can have your Momo account. Okay. And we can add on. You can have what we call prepayments. Hello. Okay, so for stock, okay, you buy and you sell. So typical example, any of the either provision shop or the malls. So what you sell, so for, that's my water. So okay, so for me, I sell this. Okay, so you buy it and you sell it. So this one is what, though you purchase it, this one is what is my stock. This is what you turn it around for you to make sales and get money. So this is what we are saying, what it is stock. So what you are trading in, whatever you are trading in, that is what the stock. So that is the reason why I'm saying that even vehicle, though it's a fixed asset, depending upon the industry, it can be what? It can be under current assets. Okay, so we have trade receivables for those that you supply of the purchase from you and they are yet to pay. Okay, they are the what? The trade receivables. or you can say trade debtors. Okay, your cash. I hope cash is not difficult. Your cash on hand, the one that you have in your pocket right now, or the one at the bank, or the one on your Momo money. Okay. Then the next one is the prepayment. So for the prepayment, you know, in Ghana, sometimes said, oh, the landlord said you should pay rent, let's say 2 years in advance. Okay, and for financial information, we are looking at what? A particular year. So assuming I pay rent 50,000 for 2 years, and I'm preparing a financial statement for a year. Okay, so for this one, for first year, the rent will be what? 25,000. Okay, so for 25,000 is for what? Year 1. Then year 2 will be what? Another 25,000. Okay, but I've paid this one in advance. So the one that I've paid in advance, that is the prepayment. And it's an asset. Please don't worry, we'll just pick the financial statement. We'll go through it one after the other. This is just the beginning. Okay, before we start the computation. And for capital, capital is we are starting, what you start your business with. Okay, in a company law, your stated capital is the same as your capital. Okay. Then you have your liabilities. Liability can be a short term or a long term. Your bank, overdrafts. These are all examples of liabilities. Okay. So with this equation, please can we proceed? Which one? The liabilities. Okay, so for liabilities, okay, so liabilities, so we can have current liabilities. Okay, so one, we have our trade payables. Okay, this one is a supplier. For you are yet to pay your suppliers. I hope you know the difference between this one and receivables. For this one, they are owing you. They will give you the money. Okay. That is a trade receivables. And for trade payables, you are what? You will pay them. Okay, so it's a liability. When you are doing the financial statement proper, you understand all this one. But this one is for us to compute, to look at the accounting equation. Okay. So we can have bank overdraft. How do we know bank overdraft? OD. Is if the bank, at least you can draw on your account, you can overdraw your account. What do you call the OD? Then we have loans. These are short-term loans. Okay. Then we have accruals or provisions. They are all the same. So for accruals, typical example, you know, in December, if you are a postpaid, in December like this, you are yet to receive your bill for electricity. Okay, but you've consumed the electricity. So assume in December, you've consumed, let's say, 15,000 worth of electricity. But you are yet to receive the bill. Though you are yet to receive the bill, when you are looking at your account, you will add this one as an expense. Because what? You've consumed that service, but yet you are yet to receive the bill. So you will add it to your expenses, then you disclose that you are owing this money. So that disclosure is what we call the accruals. Okay. Is it? So, okay, someone is asking, how will you know? But at least, averagely, from January to December, you know your consumption pattern. January to November, you know your consumption pattern. So you can estimate it. Okay, so that estimate is the accrual. So when you get the real bill in January, you can now reverse the transaction and pass the accurate or the real transaction. So yes, so anything that is, you are here to receive the bill. So it can be water bill, it can be electricity, it can be your not your utilities, anything that you can, at least you are here to pay. Okay. Yeah, rent is due and you've not paid, you can accrue for it. Are we good to go? Please, can we proceed? School fees. So, school fees is a business, okay, maybe sole proprietor. Okay. Maybe it's a okay, let me. Maybe it's a sole proprietor, so we can also, okay.
So account relates to the function of the business and trade payables refers to the business transactions, the business itself.
Okay, so at least for whatever we are doing here, it relates to the business. Okay, so that is what you should look at. Whatever we are doing here relate to what? The business. So for accruals, okay, let me just go over it again. From November to December, every month you pay water bill, you pay electricity bill, you pay telephone bill. This time they are what? They are on credit. Okay, so in December, you've consumed the service, either December, November, or any time that you are preparing your account. You are yet to receive the actual bill. So it's an estimate that you are making. It's an estimate. So that at least you get, other than that, you under-report. If you don't do that, then do that this expense, you will not capture this expense. And you think that you are doing well. Okay, so that is why we provide for. It's a provision. And you know you've done the prudent concept. Okay. Any stars? I think that the faces are, they are looking stars. Okay, so the difference between accrual and trade payables. So for trade payables, you have purchased from your suppliers and you are yet to pay. Okay, so usually this one has to do with trading. Okay, you get it. Don't worry, when you come to proper financial statement, you get for you to appreciate the accounting equation. Okay. Can we proceed? Okay, so before we start the calculation for today, or the computation for today, you will need three formulas. You say you state everything like that. For capital, the money that you start the business with, that's all. So if you start with furniture, yes, that one also is a capital. Yes. So okay, so you start your business with cash. Okay, then what? Furniture. What else? So you are starting a business with this one. Okay, so assuming you are already operating as a sole proprietor, and now you want to convert it to a limited liability company. So all these ones, you are now giving it to the business. So you quantify them. So you are having a cash of, let's say, 1,000, this one 2,000, this one 5,000. So all is what? 8,000. So your capital is what? 8,000. And these are the assets that is made up of the capital. So 8,000 capital. But you have what? Cash furniture, vehicle. Okay. So before we start the computation under assets accounting equation, you need 3 formulas. And this one, if the examiner asks and you can't recall these 3 formulas, there's no way you can compute it. So always you have to, yeah.
Sorry, I don't know the past, but I think there's a firm understanding of that. So what's the
So liability. So you are something that you are owing. I explained that we have a long-term liability and we have a short-term liability. So it's for your suppliers have supplied you, you are here to what? Pay the money. The bank has given you a loan, you are here to pay. Okay, bank overdraft, you are here to pay. Then I said what? Accruals. Then you've also taken a long-term debt. Okay, so these are examples of the liabilities. No problem. Yeah.
Basically, when you talk of liabilities, you're talking of a company's indebtedness. Okay, a company or the entity you are talking about. Okay, sorry. Okay. So you're talking about the indebtedness of the company to the whole world. Okay, excluding the owner. So if the company has bought goods from another company and has not paid yet, then the company is indebted to that third party they have bought the goods from. In that case, that amount is a type of liability. If the company has borrowed money from the bank and is indebted to the bank, then to the extent of that indebtedness, it's a type of liability. If the company has used electricity in the month and hasn't paid for it yet, to the extent of the amount of the electricity they have used, it's a type of liability. The question then is, which of the liabilities is a current liability and which is a non-current liability? The answer lies in how long will it take for us to pay? Is it a requirement on the company to pay that liability within the next 12 months? Or are they required to pay that liability in the period of more than 12 months? If they must pay within 12 months, it's a current liability. If they have to pay in a period longer than more than 12 months, it's a non-current liability. I hope it helps. Chief.
Yeah, Charlie, thank you. Okay, so debt and the trade payables. So they are. Come. Okay. So you raise your voice. So he was asking of trade receivables. So this one is the same as debtors. And trade payables. Okay, so the difference is that this one, you are going to receive the money. The receivables is the firm that will receive the money. Okay, your suppliers are here to what? To pay you. Okay, then this one, the trade payables, you are going to pay your suppliers. Okay, the payable, you are going to pay. The receivable, you are going to receive. Let's get it down. Okay. So you have your long term, you have your debenture. So these are our examples. You know, you can take a loan of, let's say, 5 years, 10 years. They are all long term. Are we good to go? So for debenture, it's also a type of loan. Okay, it's also a type of loan that you can trade on the stock. Okay, so for the accounting equation, the examiner like questions, the calculation type. Okay, so for you to solve this question, apart from the equation, you need these three formulas. And you need to know the formula. If you don't know the formula, there is no way you can compute. And usually what the examiner will do is that the first requirement, you will need the first answer in the subsequent answers. So if you can't answer the first one, then Yamutu, you'll be there. These formulas, so the examiner, so you are looking at the working capital. What is your working capital? The money that you are using to trade. Okay, so that is the working capital, the money that you are using to trade. And how do we get that one? It is our what? Our current assets less our current liabilities. And we need to know it. As for this one, I don't know, so you have to, the way, so, okay. So the first one is, we are good to go on this one. Our working capital. Then the next one is the owner's fund. So here we are looking at the capital that you started with. Okay. Then the profit that you've made but you've not distributed. That is what we call the reserve. Okay, as an owner of the business, you started with your capital, the money that you started with. And upon trading, you've made some profit. For the profit, some, it depends. Maybe you declare some dividend or not. But the ones that you are yet to distribute, that will be what your reserve. That's for the second. Yeah, hello.
The owner's fund is same as shareholders fund.
Shareholders fund, yes. Yes. You see the scholars. So that is the, we said it is retained because what? That one you've not distributed it. The profit that you've made, but you are yet to distribute. That is, as an owner, or you have shareholders, so you can decide to declare dividend or not. So the ones that we are yet to declare dividend. Okay. Then the capital employed. So the second one, are we good on this one? So now the third part has to do with the capital employed. Capital employed, we are looking at what? The capital that we started with, the reserve. Then now the long-term debt that we've added to. So you started your business with your capital. You've made profit that you've not distributed. Then you go in for loan for a very long term. That is where we're looking at the capital that we've employed in the business. These are the three things that you need. Before now you can do your computation. Can we proceed? The class look quiet. Please, are you seeing stars? You are seeing the three equations. Okay, so it is for us to resolve an issue that the examiner will give you. Usually, the examiner will ask you, give you certain information that someone has started a business, let's say for the past 15 years. Then he has approached you that, please, assist the person. Sometimes you ask you, okay, kindly calculate the asset, calculate the capital, calculate the liability. So it is based on the examiner's requirement. Okay. So for the first one, that is the accounting equation, and these are the asset is equal to what? Capital and liability. Then you will need these formulas. There is three before we can now answer these questions. Okay, I think there is one in our book. We can look at the one in the. I don't know whether. Okay, so you don't have your manual here. Okay, so for the manual, maybe I'll write it on the board. So. Page 12. let me. Okay, I will not claim it. I think in your manual you have here capital. I think page 12. We have the liabilities. And you have the assets. Okay, so the examiner said you should look for. Here is 40,000. Then he said, doesn't know this one. Here is 60,000. I think we can do for this trade. The capital, we don't know the capital. The liability is 18,000. Then here is 70,000. Then C. Here is 780. 125. Then we don't know. So this one is in at least exercise 2.1. Based on what we have been studied and that is in it under the below question. So the examiner said in this one, calculate what the liability. How are you going to resolve this one? We are saying that asset is equal to what? Capital plus what? Plus. So if you know our capital and you know our asset, what will be the liability? And at least in our basis, we did change your subject. Okay, so we are saying that what? Asset is equal to what? Capital plus liability. And the asset is 60,000. So if here is 40,000, what would we add to this one to get 60,000? 20,000. So here should be what? 20,000. Okay. So this one is just an easy one now. Then we look at past questions. Then the second part will be what? You know our asset is what? 70. So for us to look for the capital, what? We can just subtract it from here will be what? 50. Okay, let's call it. Okay, I'm not using. Okay, this one is an illustration in the manual. Then we'll just pick a past question. So here, what will be the asset?
905,000.
905,000. Okay, so we can now look at a past question. I think I put one on the platform. I think this one is 2016. The one I put on the platform. So I have a strategy of answering this type of question. Okay, please can I clean the board? It can go?
Yes.
Okay, are you sure? But we need these formulas. Okay. Okay, so that's good. Okay, so I have a way of just answering this accounting information or accounting equation. So I will do a table. Okay, I have my assets here, and I have my what? My capital plus liabilities. Okay, and we are saying that asset is equal to what? Capital plus liability. So if I see the item given, I will just have to identify it. Should it come under asset or should it come under capital plus liability? When I finish, I'll just total them. Okay, that's it. So I think you can read. I don't have my phone here. You can read the one that I put on the platform. So that is what we are attempting now. I think it's a 2016 question. Someone can read it for us.
Your client has presented you with the following summary of the business affairs. Started business 10 years ago and have forgotten the initial capital you put in the business.
Okay, so then, come again. Okay. Oh, I don't have my phone with me. So.
The client has presented you with the following summary of his business affairs. He started business some 10 years ago and is supporting the initial total inputs into the business. Office vehicle, 20,000. Computers, 5,000. Equipment, 6,000. Reserves, 8,000. Net current assets, 2,000. And long-term debts, 3,000. 1.
Required.
Advise the client on the amount of capital to introduce in the business. 2. Ascertain the total capital employed in the business.
And what was the marks there? I think I didn't. The marks was not provided. Okay. So this is a 2016 past question. And you had to solve. So this is an accounting equation question. So for me, this is the strategy that I go about. You just do a table, and we know that asset is equal to what? Capital plus liability. So when you pick the item, then you just put it under the what? The required column. So for the first one is what? What's the first one? Office vehicle. So will it come under asset or it will come under capital plus liability? It come under what? Asset. So we say what? Office vehicle. What's the figure? 20,000. Okay. Good. The next one. So that one, will it come under asset or it will come under capital and liability? Assets. Okay, so computers. Please, what's the figure? 5,000. Okay, what else? Equipment. Under assets or under capital plus liability? Okay, so we have equipment. Is what?
6,000.
6,000. Are we done?
Reserves.
Reserves. So will it go under capital or liability? Okay, so before that we come, they say we should look for what? Capital. We don't know. So reserves.
8,000.
8,000. What else?
Net current assets.
So net current asset, where does it go? Net current asset, assets. Net, yeah. So don't be bothered about the net. Net is cost minus what? The depreciation. That will give you the net book value. Okay. So it's what? Net asset. Is it net asset or net current? Net current asset. Okay. 2,000. What else?
Long term.
So long term there, where do we place it? Okay, so long term debt. Okay, so when you finish, yes. What's the figure here? 3,000. Okay. Okay, so you are saying that asset is equal to what? Capital and liability. So the total here should be equal to what? The total here. So let's add this one. 25, 31, 33. Or, so here is what? 33. So it means that here too should be what? 33. 33,000. Are you okay? So with this one, you can compute the capital. Can you compute the capital? Okay, so let's compute the capital. So the capital, you have to, when you add this one, you get 33,000. So once you have 3,000 here, you have 8,000. You can easily derive this one.
22,000.
Okay. So the capital is equal to what? The 33,000 minus
11.
the 11,000. Okay, good. You know the reason why it is 11,000?
Reserves plus loan.
Okay. So when you subtract, what do you get?
22,000.
So the man started with what? 22,000. So that's the I. Advise your client on the amount of capital he introduced in the business. So that was 22,000. Oh, the exams you can present it this way. Oh, the final is capital. So you are looking for capital. Capital is what? 33,000 minus this and this. It looks like rough work. Eh? For the exams, I mean, you don't have enough time. For every question, 45 minutes. And sometimes even you have the information, but you can't write it the way you want it. I hope at least you had the experience about the entrance. That is how it is. So for the information, for me, my strategy is, if I write 45 minutes, 50 minutes, I will just leave the question, whether I finish or not, then go to another question. Because if you spend too much time and you can't even answer one question, then it means that you are losing what, 25 marks. They will mark you under 75. So it's about picking marks. Okay, it's a strategy of like passing exam. You have to just pick marks. Yeah, hello. Yes. So you start your business with money. Okay, so the money that you invested in the business, that is your capital. Okay, so it's part of the equation. So asset is what, I think it's in your manual. So I think let me see, page 7. And the same way, when you come to your financial statement, when you come to the presentation of financial statement, you still see it. So it is asset is equal to your capital and your liability. Yeah, hello. Yeah. Oh, yes. So depending upon whether there is a... So, you know, at least I have a saying that, and I'll have a saying, maybe the first time you are encountering me, I have a saying that when it comes to exams, there is sin of what? Commission is better than sin of what? Omission. Okay, if you have it, give it to the examiner because you don't have the marking scheme. Okay, so don't reserve, because if you reserve, the examiner will think that you don't know it. But you give it to him, you might not know. Okay, so whatever you think it is relevant, just give it there. He said asset is equal to liability. No. Asset is equal to capital plus liability. Okay. So let's proceed. Don't worry. You can confirm. Let's proceed.
I got a confusion. Like he said assets is equal to liabilities, but then he broke it down. So he put capital and liabilities. So the same.
Usually, that's what they give you. Normally, they will give you the capital and the liability, then the asset. So you just arrange them. It's a way you can, so that you can easily recall. You can easily resolve. So it's the way that you put it in the exam room. Okay, so you want to come in. So that's the way. But this is the way I normally go around it this way so that they can easily recall. Okay, no problem. What do you have?
Because I'm in the same class, so
Okay,
I
so
can
no
relate
problem.
to what
Yeah,
you
yeah,
said.
no problem. Yeah.
So, what some of the books and some of the lectures do is that as a starting point, they will give you the main equation, which is total assets. And they will say, as a start, your total assets is equal to your total liability. Now, what they're doing is that they're classifying capital as a type of liability. So they say all assets, be it current assets or non-current assets, the two together constitutes total assets. And then they say on the other side, your capital, your current liability, your non-current liability, all together is what they call total liabilities. So they start from that premise, and then they move to the next step. At the next step, that's when they now begin to break down the equation into its minute form. So at the next step, they will now say assets equals capital plus liability. So now he has broken the total liability down into what is calling capital and liability. In fact, some books or some lectures will go one step even further to now say assets equals capital plus non-current liability plus current liability. So they are now even bringing your liability down further into another level. Okay. So it's the same equation that is being broken down or being expressed in different forms.
And basically, the presentation of financial statement, it is this way. The presentation, you have your assets, you have the non-current and the current, then your capital and your liabilities. Okay. But it's the way, your strategy, the way that you want to pick. But this is the way I go about it, so that you can easily recall. Okay. Yeah. Yeah. No. Capital, so you just, capital should go with liability. With liability, yes. So asset is equal to capital plus liability. You see, when you pick the financial statement, you have the asset side. Okay. When you have the non-current assets, you have your information. Then you have the current assets. Then you come to the current liabilities. Then you also come to finance by where you have what? Your capital. Okay. So for assets is equal to what? Capital plus liability. And usually this is the way the examiner will, at least for all the 3 questions that I've seen on this accounting equation, this is the way they ask it. Okay. You'll be fine as we proceed. Okay, let me. Okay. Yeah, so that is why I said we learn change of subject. So depending upon the question, the examiner can even ask you to look for capital, just like we've done. So for you to get the capital here, the capital will be equal to what? The assets less what? Liabilities. Okay, so if you are to change the subject for liabilities, liability is what? Assets less what? Capital. So if you know your subject, change your subject, you can just change it. But when you bring this one, it's like you are going into mathematics and it will create a lot of confusion. What's the next question? The next requirement? So we should look for the total capital employed. And what is the formula for total capital employed? Capital employed is what? Capital reserve can easily resolve it. What is our capital? That is why I told you every time they will use the first answer in subsequent question. So it's what? 22,000. What is the reserve? 8,000. Plus the long term. 3,000. So what is our capital employed? The city sign is a matter of choice. But you need to bring it. At least you need to, the currency that you are dealing with. So it's key. At least you need to tell the examiner the currency. Okay. Are we good to go? So this one was a 2016 question. I think there's one. Yeah.
To know that, like to know for yourself that you are right on the right path, like all the amount should always be the same.
For examination, you see, every time you are so fixated about, I want to balance. It's just speaking of marks. Because in some exam, if the examiner wants to be wicked, he will set a question that you cannot balance. Our Luke will testify that one. In the rare exam question, if it is rare accounting question, the examiner can set a question you cannot balance, or it will not balance. So if you want to change here, I want to balance it, then you use the rest of your time. So once the entries are correct, just proceed. If you do your financial statement, it doesn't balance, just proceed and go. Okay, just it's the marks that you are picking. Just pick the marks and go. Okay, so we can take the next question. The way we are moving, well, I don't know whether we can. You need to understand, okay, no problem. That is why we are here. Okay, so let's look at 2018 question. It's also an accounting equation. Okay, so please kindly look at page 276. Okay, then you can, if you can snap it. Page 276. If you can stamp it on the page. It's an accounting equation. Yeah. So this one, is it a 2018 question? It's a 2018, yeah, I think question 2D. 2018 question 2D. I asked that you should bring your manuals. You want to read it? Let's hear it. Please can you
Your client, Hagan Enterprise, has presented you with the following summary of his business affairs. He started business 15 years ago, and due to poor record keeping, he has forgotten the capital he introduced into the business. So we have vehicles, which is, vehicles, 40,000 Ghana cedis. Office equipment, 60,000 Ghana cedis. Computer software, 15,000 Ghana cedis. Reserves, 45,000 Ghana cedis. Current assets, 42,000 Ghana cedis. Current liabilities, 20,000 Ghana cedis. Long-term debt, 28,000 Ghana cedis. I advise Hagan Enterprise the amount of capital that is introduced into the business 15 years ago. II, determine your client's working capital. III, determine owner's funds.
Okay, so this one you can do it. Okay, start work. You put it on the page. I have it. So at least let's try this one.
Yeah. Yeah.
I think this is please have you put it on the page. Okay, please it's on the page. So let's try it. What's the first item? Yes, okay. This is a complete. Yeah. Okay. And that's the first thing. If you can do it, I will do it. Right. Okay. Asset of capital and liability.
Asset.
And what's the value? What's the next item? Office. 60,000. Computer. 50. Current asset. Still at the asset side. 42. What else? 160. Okay. Then capital. So we are looking for capital. We can just do the costing. What else? There's reserve. Please, we are working together. Okay. Current liabilities. 20. Long term. So then, we just total each side of the equation. So what is our total asset? 157. Then here's what? 157. Okay. So what's our capital? Our capital will be what? The 157. So you add all these. So 9.7,000. And that one will be like 64. Okay. For me, the table form is more easier. In fact, if you want a long form, you can do the long form.
No, let's stick to this one.
Someone did the long form and you will be
No,
there
let's
for
stick to this one.
Okay, asset depreciation, what is it? Is it 2 years you are moving to depreciation for the term? Okay, someone is so anxious about everything. So don't worry, it's just a structure. Okay, so today's target is for us to finish this 3. Okay. Then next week, we'll look at the double entry. Look at double entry, how to balance the account and to extract the trial balance. Okay. Then from there, we'll look at how to solve the sole proprietor question, the balance sheet, and the P&L, or what we call the income statement and the financial position. We'll do that one on sole proprietor and the company. Okay, so from there, then we can move to petty cash and bank book reconciliation. Partnership, what do we call it? So, solicitor's account. Okay, then I think financial issues. So, just, you are in good hands. You just have to come, just prepared. Okay, yeah. So please, when you go, just practice them. I don't let you forget. So what you do is, when you do your normal reading and you are tired, you can just pick the calculation and just work before you do. So every time you can just work on that and you'll be masters. I think they sell them around. Yeah, fast. Okay, so let's look at depreciation. So I just ask, what is depreciation? And someone is saying that the CD. Every time we hear the CD depreciate. So that is the loss in value. Okay, so in your manual, at least you need to know what is depreciation. So from the manual, I said depreciation refers to loss in value of the non-current asset, of the original cost of the non-current asset consumed within the period of business. So at least you are aware, if you buy a vehicle and you are using a vehicle or a machine, you see the efficiency of the machine coming down. Okay, so the value in use that is lost, that is what we refer as what depreciation. And so the loss in value. So you can pick it from your manual. I think page 41. Let me see if I have a different definition. I think it's the same thing. So depreciation refers to, or is defined as loss in value of a non-current asset. So usually we are looking at what? Non-current asset. Okay, or if it is a current asset, that one we just put provision for depreciation. So when you come to provision for depreciation, we look at that one. And then look at page 271, there is a question there. Define depreciation and outline 4 possible causes of depreciation. Page 271. It's a 2018 question, 5th October 2018. 5th October 2018. Question 3B. Define depreciation and outline 4 possible causes of depreciation. Yeah, it's there. Yeah. So now at least you can define depreciation. And what are the possible factors? Causes of depreciation. Yeah, so what are the things that will and from your manual causes of depreciation, we have, I think, 3 stated. I have 4 points here. So what are the causes? So we have physical factors. First one. The following are causes of depreciation. 1. Physical factors. This is as a result of what? Wear and tear. You have a machine, you have a vehicle, due to this usage, you see that the efficiency comes down as a result of what? Where it is. So the first factor is what? Physical factors. You see those assets that are close to the sea. You see that those assets easily deteriorate. So that's the first point. The second point is what? Economic factors. Who can explain the economic factors? So for, oh yes, let me hear.
Where there are like more technological advancements and new things come, and all things become outmoded, so then it becomes the machines.
So for economic factors, as a result of technology, I mean those who use the iPhones, and there's a new technology that comes in. So that new technology can affect the old one that you are using. It's just like a software that you are using. Once there is a new software or new app, it can affect the previous software that you are using. So if you're looking at depreciation in terms of economic factors, it can be one example is technology. And the third one has to do with passage of time. Okay, so I can read from your manual. Economic factors. Economic factors like technological advancement. Some words can bring problems. Okay, so this page 42. Economic factors like technological advancement and change in market demand can cause a loss in value of assets. Technological advancement leads to development of more efficient equipment and renders the existing ones relatively obsolete. The existing asset becomes uneconomical, inadequate, and inefficient. A typical example is a manual typewriter as compared to a personal computer. A computer is faster and more efficient than a manual typewriter. What has happened? The term is also. So this is an example of economic factors. So we mentioned to the third one has to do with passage or effusion of time. Please, your other colleagues want to hear because someone will say, match your voice. Or you, okay.
Please, I wanted to ask. So, you see, when you read economic factors, your mind goes to the general, yes. So, I was wondering, that doesn't play a role in this one. So, this economic factor is different from what we generally hear or know.
This one
So, it seems like this is just pegged to technological advancement.
it's an example. It's an example. So you see earlier on your mind is on the depreciation of the currency. But when you come, that one is a different area. It has to do with the foreign exchange. So if you're looking at physical factors, economic factors, then passage or effusion of time, that's the third one. And as law students, you are familiar with this. A lease. Passage or effusion of time. An example is what? A lease. You take a lease for a period. Okay, so with time, your lease was determined. Then you have to renew it. So this is when we said passage of time. This is what we are saying. I think it's also captured in your manual. The value of some asset is closely associated with time. Typical example of such assets are copyright, patent, leasehold properties, etc. Then the fourth one has to do with depletion. For depletion, we are looking at the mineral resource. Depletion, that is DEPLETION. For this one, we are looking at the mineral resource. So for things like this, though we are least for mineral resource also come with lease. Here we are not looking at the lease itself. We are looking at the mineral. Looking at the petroleum resource, or they are all limited. Okay, so that is what we are referring to. Okay. This is applicable to wasting assets such as natural deposits like minerals, quarry rocks, timbers, sand, oil field, forestry, etc. So we talk about depletion, this is what we are looking at. So for causes or factors of depreciation, look at what? Physical factors, economic factors, passage of time, and then depletion. As for my wife, she likes record. So maybe we will reserve like 15 minutes when you're about to close, then do a record. Okay. So with this one, we can now zoom to what are the, at least for depreciation, usually the examiner likes at least these three types. The straight line method, the reducing balance method, and the sum of negative method. How have you done it? Okay, so that's good. So look at least computation. We can pick one question. We can pick one question on this one so that we can quickly run out, so that we can achieve our target for today. Okay. So I think there is there's a question that okay, so let's look at page 324. There's a question there that ran through all the three topics, the three types, so that we'll take all of them together. Okay, the computations. 324. It's also 2020. I think question 6. Question 6. You can put it on the page. If you don't finish it, means that you have to come back to the depreciation. So for depreciation, the examiner will ask you to define what is depreciation, then the process of depreciation. They'll also give you examples or questions for you to calculate the depreciation of an item using either the straight line method, the reducing balance method, or sum of negative method. So I just want us to just get one question, then we will resolve it. Okay. So there are three methods. So we want to solve all the three. I'm not sure we can read. Okay, so for straight line method, he said that it is what? So is that when we are doing the computation, you see it. That is why. So for straight line, so we can say that we are computing a depreciation for year 1, year 2, year 3, year 4. If we say straight line, because it is straight line, for the depreciation for year 1, we'll have the same depreciation. Okay. So for year 1, if the depreciation is 1,000, you have the same 1,000 for all the years. That makes it what? Straight line. If it is reducing balance method, so for reducing balance method, because the efficiency of the machine is coming down, every time the depreciation is what? Coming down. So for year one, you have a depreciation of let's say 1,000, then subsequently it will go down 900, let's say 750, 600, 500. Okay. But for some of them, they have a way of computing it. So I just want practically, let's pick a question so that we walk through and you get it. Okay. Yeah, hello. Okay. So you let's solve the question, you get it. Okay. So for straight line method, you bought an asset. So okay. So for the market. So what is depreciation? You bought an asset, vehicle. Okay. What is the amount? 100,000. Okay, and your policy is that you are going to use this asset for the next how many years? 5 years. So if you are to use it the next 5 years, for every year, what will be the amount of depreciation? For every year, for this one, first year, because it is straight line method, it means that you are going to divide it into how many times? 5. So for year one, you charge what? 20,000. Okay. Year 2, you charge how many? Another 20,000. Year 3, you charge what? Another 20,000. Year 4, how many? 20,000. So year 5 is what? 20,000. So at the end, what do you get? 100,000. So this is the straight line method. So for straight line method, every year you are getting the same what? Depreciation. So that is why, just pick a particular question. When we go through it, you understand it. When you do it this way, it becomes more abstract. Okay. Okay, so.
The following are 3 similar things. Sharon PLC bought an official vehicle for its managing director, costing 950 Ghana cedis, which is expected to have an estimated useful life of 4 years and a residual value of 50,000 Ghana cedis. The company adopts a straight line method for providing depreciation.
So let's resolve that way. So for here, the examiner is saying that the cost is what? 950,000. Okay. Then we say what? Residual value. So at the end of the year, what is the residual value?
50,000.
50,000 each. Then the useful life
4 years.
is what?
4 years.
4 years. Okay. So for the residual value at the end of the 4 years, the value, the remaining. So for at least the cost, I think the cost is clear or is fair. Which of them? It's fair. Okay. For the residual value, we are saying that at the end of the 4 years, the value of the asset, it has moved from 950,000 to what? 50,000. That's the meaning. The residual value, it means that at the end of the 4th year, the value of your assets has moved from what? 950 to what? 50,000. So that is this one. So that is your 50,000. It means that when you sell it more than 50,000, what are you making? You are making profit. Less than 50,000. Good. So then this one is what? For 4 years. Okay. So the examiner said you should what? Compute the depreciation the accumulated depreciation, and what? The net book value. Okay. For the straight line method. Okay. So for this one to is a net book value. Okay. So for this one too, you can resolve it by a table. That makes it more easier. So you have your years. Okay. You have what? Your depreciation. Accumulated depreciation. Then someone is asking what is the net book? The net book value is your cost less the accumulated depreciation. So you have your first year, second year, third year, and fourth year. Okay. So you can first calculate the depreciation for straight line method, depreciation. The depreciation is equal to the cost less the residual value over what? The useful life. What is the cost? 950,000. So then you will less what? The residual value. Because at the end, that's the residual value we want to see. 50,000. Then you divide by what? The useful life. What's the useful life? So what do we get? 225. Okay, so this is our annual depreciation. Okay, so for the straight line method, we'll have first year, our depreciation will be what? 225,000. Okay. What is our accumulated depreciation? It will be the same thing. So that's our first year. 225,000. That is year one. So that is accumulated. That is year one. So year one, this is the only depreciation that we charge to our P&L. That is 225. Then what is the net book value? It is what? Cost less accumulated depreciation. So what's the cost? So here is what? 950,000 less what? 225. What do we get? 725. So year one, our net book value is what? 725. But here you can just do the calculation outside and just write the 725 here in the table. Okay, so what's the year two depreciation what? This is straight line method. So it will be what? The same depreciation. So it is what? 225,000. Okay, for year two. What is the accumulated depreciation? Now you have year one, 225, plus year two, 225. So what do you get? 450. Good student. Someone say I should go. Okay, so we are saying that we are accumulating. Okay, so for the second year accumulated depreciation, is the first year depreciation and the second year depreciation. That is what we put together to get what? The second year accumulated depreciation. Are we good on this? Can we proceed? So what we get there? What will be the net book value? It will be the cost minus. No, we are not. We are looking at the cost. So just look at the cost. So the cost less accumulated depreciation. What is the cost? Less 450. What do we get? 500,000. Okay. Then let's come to year 3. Year 3 is what? 225. Okay, for the third year accumulated depreciation, because it's the third year, you add what? First, second, third. Or equally, you add this one to the second year accumulated depreciation. Please, are you following? Okay. So for the third year accumulated depreciation, you add is what? 675. Okay, good. So what will be our net book value? Two seven. Okay. So the fourth year, towards the fourth year depreciation, 225. What's the accumulated depreciation? 900,000. And what's our net book value? 50,000. So this is your residual value, the 50,000. So this is your straight line method. For every year, the depreciation will be the same. But when it comes to the reducing balance, the entry that your computation is wrong. Because it said that your residual value is 50,000. So once they give you the residual value, this one should be equal to that. Other than that, it will be that the computation is wrong. So this one is for straight line method. The reducing balance is different. The sum of digits is different. So we are done with the straight line. Can you do the reducing? I'm moving fast then. Or we should pick one on straight line so that we know that that is good. So yeah, so you stop there, you finish with the straight line. So for the requirement A, B, C, or A, you finish. But the requirement is that calculate the annual depreciation. So this is the annual depreciation. Okay. Show the annual cumulative depreciation. This is the annual. Then the net book value. This is the net book value. Then you are done. Don't waste time. It's about picking maths and time management. Should we proceed or will we finish today's or we should adjourn it?